Good day, everyone. This is the weekly note of GTC Traders for October the 29th, 2023. A weekly note is something we have packaged up here at GTC Traders. I'm the senior partner in a private proprietary equities firm. And so what we've done is we just take the weekly or daily note. I'd like to actually have a daily note there. But we've just packaged it up as a weekly note. So just moved it over from the prop firm and we're showing it here live on GTC Traders. If you're new to a weekly note or a daily note, sometimes as they're done, and we like to do them, if you go to the video hosting site like YouTube and go to the playlist for the weekly note, if you go to those first three entries and you're sort of new to what a weekly note is or a daily note, those first three entries have a lot in them. Sort of even the first four entries have a lot in them as to the value of a weekly note and why so many firms do this. Okay, so there's all the introductory prep. Now, this week we're switching it up a bit. We're going to make it easier on myself, which is always a good thing because I have a lot going on. We're going to make these videos more brief and at the same time give you all the information. So how are we doing that? If you go to the description of this video, there's going to be a link to the actual article. The text there, we're making this super easy on myself. I am literally taking it from the private prop firm and we're just copy pasting it and putting it in the text of the actual article entry. Okay, so how do I find that? Well, if you're on the video, you just go to the description and there'll be a link directly to the article, and the article will have all of the stuff that we usually have in the weekly note, right? Thoughts on interest rates, major markets, equities. Are we bullish? Are we bearish? Are we, what's going on there? So all of those details are still there, but they're not going to be in the video, right? Then it's not going to be 20 minutes of video. It's going to be all in the text, and you can just boom, 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 read it through real quick. And that way it's a lot easier on me because I can just copy it straight over from the prop firm. And then the video comments will just be some brief comments that we have to make. A couple of things. Obviously, this week's big as we move on to actually the daily note after we've got all this introduction done. This week's a big week. It's FOMC. We got an FP at the end of the week on Friday, which is actually the beginning of November. But those are the two biggies this week, and I know I have that on the text entry, but, it's sort of a highlight, and that's why I'm mentioning it here. Something else I wanted to mention is if you notice, we have gotten this downturn in equities blindingly correct. So would you like to know how we predicted this downturn in equities so well and have been bearish this entire time with a bias that is bearish on equities? Because I'm going to be quite honest as to how we predicted all of this. And I'm just going to give you the whole thing. I'm not really going to try to hide anything here. I'm going to be as bluntly honest as to how we got this downturn in equities so blindingly correct. And how did we predict it? You know how we predicted this? We didn't. We have a process, an iterative process. And we do the same thing every time. And sometimes it's going to take, and sometimes it's going to stick, and sometimes it's not. As we say here at GTC Traders, learning to become a professional trader is learning to become a professional gambler. And you have an iterative process that you go through. We didn't predict anything. We didn't know equities would, turn down this much. We had no idea. No one did. Anybody that tells you they did is either dumb, a liar, or both. They're a dumb and a liar. There's no way to predict. This is not my opinion. In the realms of science, this is a known scientific law. You can't predict anything. And what people do, and we've noticed this, is they just run to the guy that's been right lately or on a good streak. And by the way, new retail traders who are looking for somebody to listen to, that's not new. The same happens in the asset management world, right? Can you get sticky money? In other words, money that just, assets under management that stays with you. Because what do investors do? Oh, this guy's been right. Exactly the opposite of what they do. And you would think QEPs or accredited investors would act differently. They don't. When there's huge drawdowns, the phone calls will start and, what's going on here and everything, right? And they pull their money from the guy that's in drawdown and they go to the guy that's hot, which is exactly the opposite of what they should do. You know what you actually should do? for QEPs, and this is from what I've been told, this has been tested out. I haven't done any sort of tests on this, but what one should do is they should find the asset manager with the longest track record, right? A bunch of different asset managers with the longest track record, and then instead of running to the guy that's hot, they should run to the guy that's in statistically normal drawdown and invest with him, right? And then wait until he's on a massive win streak, take the money out, and then go find the next asset manager that has the longest, greatest history and is in some statistically normal drawdown and invest with him. That would be the way to do it. No one does that. They always run to the hot money, and it's the same thing with new folks who are trying to find someone to listen to, right? Is wow, this guy's had amazingly, blindingly correct calls. Look at how he just nailed this downturn in the market. You know, his predictions have been spot on. Well, you come to me, I'm going to be the guy that's like, I didn't predict jack all. I have an iterative process. I go through that process. We are bearish on equities. We're still bearish on equities. Yields have stalled a little bit, and so have equities. Well, equities haven't, but I wouldn't be surprised to see equities stall a little bit. I'm expecting a relief rally at any minute, but we are still bearish on equities. Why are you still bearish? Because we have an iterative process, and we go through that process, and it's saying to stay bearish on equities. That's why. So we're still bearish, and we're riding with it. No predictions. Didn't predict anything. If there's one thing I would like to stress to new retail traders is I didn't predict anything. No one predicts anything. It's an iterative process. And retail traders who are looking for somebody to listen to, as well as QEPs and accredited investors, everybody gets it wrong. They run to the guy that's hot. Run to the guy that's in statistically normal drawdown. And it's the same with investing in stocks. What does everybody do? Oh, when the market's rallying, oh Lord, let me get involved, right? When it's cratering, oh no, stay away. That's exactly the time you should get involved. When should you have basically got involved in the stock market? During the Great Depression, during the worst of it, like 1932, I think it was. I don't know. I don't have the historical charts in front of me. That's when you should have been buying with every dime that you could get your hands on. It was just right in the crux and the worst of the Great Depression. I think it was the end of 1931, 1932. Right? But no one does that. So that's just been my thoughts, right? If you want all of the exact specifics of the weekly note, whenever the website actually comes up and we can get it up and the weekly note copied over, it will be copied over for this particular week. But for this particular week, that has just been our thoughts on things. We're waiting for the Fed. We're waiting for NFP. And remember, all of the preceding, and it has just been our thoughts, not your thoughts. Our thoughts are malleable. They are good until they're canceled, like GTC in the order type. And have just been our thoughts, not yours, for whatever the heck day it is. As always, stay safe, trade well, and remember that love doesn't cost a dime.